Welcome to the B.F. Anderson Technical Report for November the 5th. Longtime bull Jeremy Siegel, quote, stocks rally on odds of GOP keeping Senate and stopping tax hikes. So, as we are concerned about the executive office, the president, we should also be concerned about what's going on with the Congress. And so far, it looks very positive that the Senate will remain in the hands of the Republicans. So if there is no blue wave, then we don't have to worry so much about taxation and regulation. So that's why the market is rallying right now, because that's all it's looking at. I mean, it could care less who the president is. It really cares about congressional regulations and taxes. Now, here's why this is important. If you look here at corporate tax rates from 2010 to 2020, and you take the United States, we had a maximum tax rate on corporations of 40% for years, for decades. And compared to other countries like Germany, China, and Argentina, we just weren't competitive. So the administration, along with the Congress, decided in 2018 to go ahead and bring down, actually late 17, bring down the tax rate to 27%, which was a very smart move because now we're very competitive with other countries. So if you really think about it, I mean, a corporation, it's going to keep its operations where they have reasonable taxes and reasonable regulations. So with the Senate being retained by the Republicans, I think that's a real positive. Now, on just the market itself, the NASDAQ continues to be in a very strong uptrend. We've gone through a correction, a rally. Now, I will mention here, we have a double top here, and the second top is lower than the first top. So it would be nice if this particular rally could take us to new highs. We'll have to see, but it's not the most positive formation, but it's getting better. We basically had another correction. Along with this correction, we're still basically in one big correction, and then we're breaking out. So as we said in past weeks, we really don't feel like this is a bear market. I mean, here we have the 35-week moving average in an uptrend. The index, the NASDAQ, continues to stay above the 35-week on a weekly basis now. This is weekly postings of the price. So you can just see here that we continue to stay in a very bullish, constructive pattern. Now, on the monthly graph, which is really a good way to step back and just kind of look at the total picture, the S&P 500 continues to stay on a golden cross, doing fine. The NASDAQ, same thing. We're on a golden cross, continues to stay in a very positive uptrend. Now, if we look at China, you're going to notice here that China hit an all-time new high. China is acting very interesting. I really think we just kind of have to smell the coffee there. They are the fastest growing economy in the world. And really, when it comes to investing, there's just not a lot of other countries out there that I would even begin to be interested in. There's really nothing in Europe that I know of. Never have found anything really in Europe. I find a few things maybe occasionally in Latin America, but it's China. That's where you want to be. All right, here is the aggression index where we're comparing the NASDAQ to consumer staples, which is like computers to toothpaste. We pulled back with the correction, rallied somewhat, but however, kind of held in there, pulled back below the 50-day moving average, but now we're rallying. But the indicator itself has really gotten positive here. The 40-week moving average continues to stay in an uptrend, and the particular ratio is hitting a new high. So it's basically saying investors are comfortable with the economy and things are looking positive. On our three economic indicators, Treasury bills, Treasury notes, we're looking at the interest rates there. Interest rates continue to stay in a downtrend. See no major changes there. West Texas Intermediate crude oil prices, same picture. We just continue to see a downtrend. On the financials, which are pretty much dependent on interest rates, continue to be in a downtrend as well. So just for your information. Now here's the S&P 500 on a daily basis using the 25 and 50-day moving average. You can see we're back above both moving averages. Very constructive. Also very constructive that we continue to hold above the 200-day and looks good. Now on new highs, this is somewhat of a negative. We're seeing a kind of a reduction of new highs. We really got going here back in August, and then we peaked in September, and then it really kind of somewhat came down. So new highs need to improve. That's one negative that we're definitely seeing. Now on new lows, really not a big problem, but we did get a spike in the number of new lows on the New York Stock Exchange here recently. And however, we've somewhat settled down now. We're below 40. So may have been just a temporary period. We'll just have to keep an eye on it. Now here's the put-call ratio where we're measuring institutional sentiment. We want to know, are institutional investors fearful or are they greedy? And they continue to be greedy. It's really amazing to me how this has worked. But really the best buying opportunities come up here where they're very fearful. Now on the volatility index, you can see here that we peaked up here during the correction, the coronavirus correction. We're now come down, got below 30. Somewhat in the correction that we just had, we came back up again. We're pulling back. So the volatility index is showing quite a bit of improvement. Now here's a graph. I wanted to just show you a daily graph on the PGJ, which is the Invesco Golden Dragon China ETF. This is every Chinese company that trades in the United States. You can see here that a major breakout has taken place here as of today. And I just continue to say this area is looking very promising. Now here's copper. This is Freeport-McMoRan. We're just seeing, again, a major up move in copper. Usually means good economic activity because copper pretty much goes into everything. Let's just see what happens, but it did break out, make a new high, and has pulled back a little bit today. Let's just see what happens with copper. Now on the top 5, we've got Pinterest, which is a social networking web page basically where people can talk about anything, wedding planning, home building, you name it, it's on there. So it's kind of like a Facebook in a way, but very specialized, and people seem to like it. So we got a gap up buy signal here on very heavy volume, 120 million shares, very heavy volume. However, the problem for me is it's pretty much failed to hold that gap. Anytime it gets below the lower end of the gap, I get a little nervous. However, it's kind of looks like it's trying to turn a little bit here. So we'll just have to keep an eye on it, but I wouldn't take a position at this point. Now here's Alliant Technology, which we do own. We own this stock. They make a product that is a clear set of braces that replace the old traditional metal braces. It's called Invisalign. Now you can see here on their earnings announcements, which their earnings announcement could not have been any better. It was fantastic. We got a major gap up on 5 million shares. Stock gapped up, continued to rally, then pulled back, barely held the gap, but then firmed up and is now making new highs. This is a very constructive pattern. Here's Carrier Corp, which is, air conditioning, Carrier air conditioning. I really don't understand what could be going on there that would be driving the stock so dramatically, but there could be some new technology coming. And also here they're kind of somewhat benefiting from coronavirus because they're coming out with systems to ventilate buildings. Here's Gap, which is a retail situation. Pulled back, kind of holding steady. We'll keep an eye on it. Here is Cirrus Therapeutics. Breaking out of a base area, looks somewhat positive. So that's it. If you have any questions, please give me a call.